Beijing has been purchasing nearly 90% of Iran's crude oil supplies, but since the recent U.S.-Israel strikes on Iran, oil exports coming through the Strait of Hormuz have come to a standstill. What are China's options? NTD's Arlene Richards explains the dilemma.
On Tuesday, Beijing called for an immediate halt to U.S.-Israeli strikes in Iran.
Paired with the raid in Venezuela earlier this year, there's been a pretty significant impact on China's oil supplies.
For decades, the Chinese Communist Party has been a consistent buyer of Iran and Venezuela's crude oil. It ramped up purchases of Iranian oil to record levels 3 years ago amid talks between Iran and world powers to revive a 2015 nuclear deal that would have lifted significant sanctions on Iranian oil exports.
China gets somewhere between, let's say, 15 and 23% of its seaborne oil from Iran.
Since the strikes began on Saturday, Iran has closed the Strait of Hormuz, a narrow channel off of Iran's coast. Nearly 20% of global oil usually gets transported through the strait every day from several Gulf countries. But before the U.S.-Israel strike, the CCP was importing a little over 1 million barrels of Iranian oil per day, up from 700,000 barrels 3 years ago. The two countries had made a deal that gets around the multiple sanctions on Iran and saves Beijing $8 to $10 per barrel against benchmark pricing. Iran was bypassing the sanctions by shipping its oil through Malaysia and Indonesia. Their arrangement has saved Beijing billions of dollars annually and provided Iran with its primary revenue stream.
Donald Trump tightens the noose on the shadow fleet that has enabled all of that. The bigger target is actually communist China, which is increasingly in a box, is going to have to start buying its oil, the huge percentage of its oil, on the open market at full price.
Beijing was buying about 17% of its overall crude oil supplies from Iran and Venezuela. It buys another 18 to 20% from Russia, which accounts for nearly 50% of Russia's total crude exports. But what if the conflict drags on?
Right from the beginning, we projected 4 to 5 weeks.
Beijing has been stockpiling a significant amount of oil, and it had already begun ramping down its imports of Iranian oil in 2026 in exchange for more Russian oil. But Beijing has also been relying on other Middle East countries for oil, including the biggest supplier in the region, Saudi Arabia. Those exports also went through the Strait of Hormuz, which is closed. If Russia agrees to a peace deal with Ukraine, Beijing could lose another big oil supplier. Arlene Richards, NTD News.